Let's talk a little bit, Mitch, about the months of supply of inventory in the Atlanta market.
Yeah, month supply is a great number to look at just to give you, it's a indication of demand and supply at the same time. It gives you a number.
Right.
And essentially, right now, what we're experiencing is extremely low supply. Lowest we've seen in a very long time.
Yep.
And an all-time high demand as well. So what this is doing is giving you a very low months of supply. And actually, the last 4 months, 5 months actually, has been under 1 month. The equilibrium, which is normal, is 6 to 7. So what it's saying is, with all the homes currently listed for sale in Metro Atlanta, it would take less than a month to sell all of those homes at the current sales pace we have been experiencing the last 12 months. Every single price point under $1 million right now is under 3 months of supply. So even with those metrics, it's still undersupplied no matter what you're looking at. Interestingly enough, even $1 million and up is just under 5 months of supply, which would be considered maybe equilibrium with these new numbers you just mentioned, but industry standards, it would still be undersupplied. We don't see anything above 7 months until you hit $2 million right now. So if you go off the old numbers, old standards, anything under $2 million right now is undersupplied market.
To have inventory at 5 months or 6 months or 7 months is a very good market for that over $1 million listings. Would you agree?
Oh, yeah, definitely. I mean, even overall market, the dark days of, 08 through really 2012, we peaked at 14 months at one time. So
14 months
how far we've come in just 10 years.
For the whole market. For the whole market. Let's talk about where we are from a pricing standpoint historically.
Yeah, well, we went with a good bounce back from the months of supply. What happens when we have historically low supply and historically high demand? Prices shoot up, and that is what we are seeing right now. I think year to date, we're up 23% from we were a year ago.
Yep.
I mean, you're going to see the average price of a resale home probably hit close to $400,000 this year. Just 10 years ago, this is back in 2011, the average price of a resale home was $145,000. So we've gone up 175% in 10 years for average price.
So, Mitch, these numbers are just from the first multiple listing service, and it's something that we talked about in the first segment. For the month of June, the average sales price for a single-family detached home in the listing service was $442,000, $442 for the month, which was an increase of 30.7% over the prior year. Condos and the townhomes, $327,901 on average through the month of June. It is amazing what has happened in the prior 12 months.
When we started bouncing back, which was in June of 2020, just about a year ago, out of COVID, and I mean, everybody thought the housing market was going to collapse. Instead, it did the exact opposite. It started booming. What was really lagging was the attached market. Condos and townhomes, condos especially. People wanted the more space, they wanted the yard, and then just recently, just maybe 4 or 5 months ago, we started seeing it really pick up. We have attached resales up 103% average price in May from May of last year.
Wow, is that what you?
A little bit of a skewed number because they were crashing in May of last year, but even so, I mean, it's pretty incredible.
Let's talk real quickly, if we could, about how long is this going to last, and if it starts to slow down, what's going to cause it to slow down?
I hope it lasts forever, I'll say that. But how long is it going to last? I mean, if anybody actually knew the correct answer, they would probably be a very rich person. But,
yes, they would.
I mean, from just talking with builders and other experts, it doesn't seem like it's going to slow down anytime soon. We still have so many homes we need to add to the market right now to get back to what is considered a normal level, whether it be 4 months or 6 months. And it's just so difficult right now to even build homes. A couple factors, you mentioned that or asked that. The mortgage rates, I think they're still at like 2.75 right now, which is really generationally low. If those start rising, you are going to have a little short-sighted, people like, oh my God, why are they going up? But even if they go up to 3.5%, I don't think it'll be an impact. If you start seeing rates maybe get up to 4.5, you will see a slowdown. Another aspect too, we just mentioned the prices and how out of control they are. Yeah, it's great to be owning a home, but buying a home right now is incredibly difficult.
Eventually,
we're going to start pricing out a lot of people.
Yeah, eventually a fire will go out. The market's on fire, and eventually it will go out.